Today, I want to talk about how short sellers are trying to make a deal to buy back synthetics to close out of their illegal short positions. I also want to explain how shorts really are in big trouble and how, as a result, the squeeze could be just mere weeks away. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, I want to start with this email directly from Nextbridge Hydrocarbons about how short sellers have been trying to buy back their synthetics directly from Nextbridge. Now this text might be a bit small and hard to read, but Dave Lauer received the exact same email and had some very interesting words on it. So it says, despite the passage of a year since the U3 halt, critical facts remain elusive. For example, FINRA announced that its investigation showed an approximate aggregate short interest position in MMTLP of 2.65 million shares as at December 2023. However, representatives of short sellers have approached Nextbridge about buying considerably more shares than this figure. Basically saying FINRA has said there's 2.65 million short positions, but short sellers have approached Nextbridge directly, trying to buy back way more shares. Now you might be saying, hang on Tom, I've got so many questions. How do we know this is actually true and that Nextbridge aren't lying? And how do we know these representatives actually came from short sellers and aren't just random people? Well, as I said, Dave Lauer had some very interesting words. So he replied or repeated saying in an announcement from Nextbridge, they claim that representatives of short sellers have approached Nextbridge about buying considerably more shares than have been publicly reported as short. He said that's quite a statement, and if true, then transparency is needed from regulators. He said, obviously, this is not the only reason or justification for transparency, and I've been consistent in my calls for it. He said, I don't think there's much FINRA can do given their authority, but the SEC and Department of Justice should be on top of this. And he said, just to make it clear, I don't think Nextbridge would have said this publicly if it weren't true. And if true, which I believe it is, then it's very consequential. He said, I look forward to seeing the evidence and confirming it, and to seeing future enforcement actions and their evidence too. We know by now, especially CEOs of big companies can't just make wild accusations in the public eye, but otherwise they're being caught quicker than you could say anything possible. They can't make any kind of accusations or assumptions about other people unless they have absolute proof. This is why I've said in the past, Aron hasn't spoken much on synthetic shares because he just doesn't have the proof to hand of how many synthetics actually exist. Because obviously Aron doesn't keep a running tally directly from Ken Griffin on exactly how many synthetics he has created. But Nextbridge obviously have clear proof that A, they've received a figure from FINRA, which is 2.6 million shares or shorts outstanding, and also clear proof maybe via email of short sellers trying to buy back way more shares. They also must have proof these representatives actually come from those short sellers in question, like an email with the email signature and an email relating directly to someone maybe at Citadel, for example. Like Fred at Citadel.com, a clear Citadel employee. Now, I think this is one of the biggest steaming piles of evidence and biggest threat to the short sellers we've seen over the last 3 years. Because we finally have proof directly from FINRA of how many shorts should exist, and we also have proof on how many shorts the short sellers have tried to cover. It's not just assumptions, it's not just guesses, it's not just accusations, it's not just possibilities of synthetic shares, there's actual proof in email evidence. I also wanted to go through another 50% trade we had in the Millionaire Mindset Trading Group and talk about Ross, who's made profit back to back to back to back. So today in the pre-market, I saw CRGE running up, and I said a break of this pre-market high at 17 cents would push the stock higher. And what do you know, when the market opened, it broke through that 17-cent high and ran another 50% on top of that. And as I said, Ross capitalized, taking an additional 29% today, as well as the 60% he took yesterday and the 101% before that. See guys, it's not just rare one-off trades. These trades happen every single day and the group always capitalizes. We also had Firefly, who's been locking in small regular gains all week, making 3 profitable trades out of 3 today, locking in $319 for the week. On top of that, it wasn't just Ross and Firefly that capitalised on CRGE, it was also Zepp, who got 10%, Night Chaos 10% as well, John 20%, Shred 10%, and even more. Moses also had a great call option on AMD that I also suggested, making an additional $400 as well. As I say, guys, these 50%, 100%, 150%, 200% runners happen every single day. So guys, be sure to join the Millionaire Mindset Trading Group using the link in the description below. Now, so let's also explain why I think the shorts really are in big trouble and why the squeeze is likely only just weeks away. So to start, Stonks Batman has tweeted about the failed delivers, which I also touched on yesterday. So Stonks Batman tweeted about the FTDs for AMC, saying it could get really interesting this year and the next. Now, so we remember back to August and September of 2023, where we saw a new all-time high of FTDs, around 50 million FTDs in one day. Since then, FTDs have been really small, and somehow the shorts managed to cover or close out of those FTDs. Now, I use those air-phonetic quotes because actually they never did close out of the fails. And we have pure evidence of that in the hidden FTD data that was just released a few days ago from back in December. You can see this bar here, which comparatively looks fairly small to this bar, but is actually a new all-time high in FTDs. Because you can see this bar here is 5.4 million FTDs, post-reverse split or pre-split is 54 million. Even more FTDs than we saw back in August and September. So actually the FTDs didn't go anywhere, and the FTDs are actually still at all-time highs, even higher highs. Now on top of that, you'll remember for 2023 that short sellers lost around $11 billion shorting Nvidia, as well as even more money shorting Apple, Meta, Microsoft, Amazon, AMD and others. But let's also touch on the gains that both Nvidia and AMD have made since the start of 2024 in literally the last 2 weeks. Nvidia has ran from $470 to nearly $600, and AMD has ran from around $134, $135 to around $175. Both of these stocks are up 27%, 28% in the last 2.5 weeks. So that means the shorts in literally the last 2 or 3 weeks have likely lost another $10, $15 billion already. Now on top of that, the Kabesi letter tweeted about China's largest brokerage, CITIC Securities, who have just banned short selling entirely for some clients. Not just banned synthetic short selling, but have banned short selling outright, just like South Korea did. It says this comes as the Shanghai Composite Index is having its worst start to a year since 2016. Again, this is yet another country banning short selling outright. First it was South Korea, then India, now China, maybe UK next, and then maybe Europe after that. And then it'll literally just be down to the United States to also ban short selling. And by doing so would pretty much instantaneously cause the squeeze. It says China's stock market is down nearly 25% from its recent high and 5% year to date already. Now, the article actually says that Chinese stock brokerage firms have also suspended short selling by preventing borrowing to clients and increasing margin requirements on institutions. So not only can individual retail investors not short sell, but also institutions can't short sell either. That's absolutely huge that, as I said, yet another country is banning short selling, and I don't think the US will be far behind. I think they literally have to if the entire world is doing the same thing. Now, Robert has also tweeted and explained how Aron really did save AMC, and I want to go through this and bust a lot of FUD that I see in the YouTube comments. Every time I bust some FUD, the short sellers or the shills have some other excuse or some other explanation as to why Aron is a bad guy. First they say Aron's a bad guy because he sells shares, but then when I point out that selling shares literally has no coordination on how successful your company is, they say, oh, that doesn't matter, but Aron did this instead. They say Aron's working with the short sellers to try and crush AMC, to try and crush retail investors, when actually Aron is doing the exact opposite. Actually, to be specific, Adam turned down $1 billion to let AMC go bankrupt back in 2021. That's a fact. He went against the grain. A group of creditors led by Apollo were offering AMC and Aron a tempting billion-dollar loan to keep the company operating in bankruptcy. So Apollo would have given AMC and Aron $1 billion to let the company go bankrupt. And he said 99 out of 100 CEOs would have went with their advisors and let the company go under, but Aron did not. And as I've said, if Aron were working with the short sellers, numerous times could he have let AMC go bankrupt at any time over the last few years. He could have taken the $1 billion bribe from Apollo, he could have sent all the employees away on a holiday, he could have closed theatres for just a few days. Doing anything would have caused AMC to go under. He could have accidentally breached some loan covenants, making the loans repayable on demand, causing bankruptcy instantaneously. Doing any of the above would have bankrupted AMC within 7 days, but he chose not to, and AMC is still here. And it's not just still here, it's setting revenue records, profit records, and cash flow generation records. I 100% believe Aron saved AMC, and that AMC will still be around for a long time to go.